Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 1st of October, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the first week of October. And let's begin with spot gold, where at the start of the week, it's tested the 1650 before falling down further. Continuation bearish move here, following a bearish close on the previous Friday. It did not reach the next key round figure at 1600 and managed to turn around on Wednesday. But it did dip to a low of 1614, just below 1615, before it managed to recover and reverse back up. A strong move back up, not a reversal, but just a retracement back up, and followed through till the end of Friday until it eventually pulled back lower to close just above the 1660 level. And we will see later on the inverse correlation with the US dollar, where the US dollar did have a significant turnaround and retracement lower on Wednesday. So there was a inverse correlation here that happened at the same time with the US dollar weakening or retracing lower, and then the spot gold retracing back up. So that was the managed to turn around. And on the Thursday, there was the US final GDP figure, which confirmed a technical recession with 2 consecutive quarters of negative growth. That came out slightly lower than expected of minus 0.6%. And this was for the first 2 quarters of the year. And on Friday, the PCE price index for personal consumption, an indication that for inflation as well, also came out slightly higher than expected. So inflation is still not going away just yet. So with that, the US dollar did tick back up, and that's why there's this pullback for spot gold here on the Friday. And this coming week, there's a couple of PMIs. The flash PMIs earlier previous week was lower than expected, but now the US ISM figures will be released this week, and then the key one on Friday, non-farm payroll report for this first week of Friday. So support is still, interim support is still valid at the 138 fib extension of this swing move reversal. And it did not reach the 162 fib extension, where the round figure of 1600 is. It did not manage to recover all the way back to retest the swing low yet, and that's just at about 1680. So there could be a retest still for this week. And then the next major resistance is way up at 1700 now. So we'll see this week if it's still going to be stuck within this range between the 138 and the 100 pip levels, which is still a quite significant range. That's still from 1632 to 1680, so that's still 480 pips there. And it could just consolidate around just above the 1650 figure. All right, with expected volatility on the Friday. All right, so let's check out the US dollar index, the DXY, to see how it's correlated to spot gold as well. And here's the US dollar index, the DXY. Let's expand this slightly, and you can see that it started the week straight away to hit the resistance zone up to the 162 fib extension and spike through the 114. Pause on the Tuesday, but then on the Wednesday, it did attempt to initially to climb up higher, but then quickly was rejected and strong retracement back down, all the way back down to the 112 level. So that's this swing move down is already about 260, 270 pips. So it was expected retracement since it's already hit an overvalued, overbought level. And then on Friday, it did manage to recover somewhat with the US PCE index and settle around the 112 area. So this would be an interim levels at the 138 fib extension. Key resistance zone is still up at the 162 fib. And then the support is going to be at this swing high, previous swing high here at the 110.50. So that will be actually a significant support now. And of course, well below that is the next fib level at 78.6 and next to the 109 round figure. So it does correlate inversely with the spot gold reaction, where spot gold did dip lower and then turn around and retrace back up. So similarly, the DXY did the same as well and retraced lower. So now we'll see if it will try to retest the resistance zone, or whether it's able to get past the 138. And if it's able to find support just above the previous swing high at the 100 fib. So just at the 111, or whether it's going to dip a bit lower and retrace further into the swing high area to retest that. It could try to pull back all the way to retest that area. Let's also check this. We can check the retracement here. and it's retrace into the 30 fib. 50 fib will be at the 111, so that will be next possible target. And if it does attempt to retest the swing high, then it could reach the 62 fib retracement. So that's also possible if it retraces a bit deeper. Okay. All right, so this coming week, the only key trigger will be the Friday's non-farm payroll report that may create the volatility. So meanwhile, looks like it could just consolidate between the 138 and the 100 fib. We'll see if it is able to dip below the 111. Okay. All right, so let's move back to the other major pairs. Let's move on to the dollar yen. And it's been a very, very narrow consolidation here. For last week, holding above the 10 SMA. So very, very small and tight range here. About 100 pips for the week. And slight gap up at the start of the week just to target back the 145 key resistance level, and where the Bank of Japan intervened the previous week once it shot past 145, and then it bought back the Japanese yen to strengthen it, and that's where the dollar yen fell. But now it's very resilient, and US dollar is still fighting back again. But it's all sitting under the 145 key resistance now. And interim support will be at the 142 level. So right in between the key support resistance levels, which are much further away, with the 140 between 140 and 145. So it did not settle within this range between the 142 and 143, and it's still just trying to stick close to the 145 area in an ascending triangle. So at any time, if it does attempt to break out higher, there is the BOJ probably waiting to intervene at any time, and watch out for volatility then, where it could swing back down lower. Okay, so unfortunately, the it's not going to do much until it does break down. It's already restricted on the higher end, and it's not retracing lower past the 142. So the 140 round figure is holding as a key support. Okay, so unfortunately, it's difficult to trade this now. If it is a very tight consolidation, then it's actually better to trade the cross pairs, yen cross pairs, since there's a very little impact from the yen itself, from the Japanese yen. So it will be the other major pairs of the cross pairs that will dictate the movement. All right, so watch out this week with the US dollar again, and with the key news leading up to the non-farm payroll report on Friday. Okay, so do stay safe, have a good trading week, and cheers for now.